Hi, Leanne Johnson, Realtor with United Real Estate Solutions. I am sitting with Jeneane Stomm in her awesome downtown Knoxville office, and today we're going to be talking about the impact of COVID-19 on home buying. So don't go anywhere. All right, so I'm sitting with Jeneane Stomm, who is one of my preferred lenders here in Knoxville. Janine, you want to introduce yourself?
Yes, Jeneane Stomm. I work for Bay Equity Home Loans as a mortgage loan originator, and I have been doing mortgages for about 16 years. And throughout that process, there's been a lot of lessons learned, and I enjoy the opportunity to impart the wisdom that I've gained in this business to others. I love the opportunity to be able to sit here and discuss the mortgage market.
Awesome, that's great. So we're going to talk today about COVID-19. So if you just want to start by talking about some of the main issues that you've seen in your field and how that has impacted your clients and their ability to purchase homes.
Okay. There's basically twofold of the issues that have happened. One is the clients have, of course, the obvious, they've all lost. A lot of people have lost their jobs. They've been furloughed. So in the furlough process, they're no longer working. Some are receiving partial checks, some are receiving no checks. Some people have scrambled and had to get a job, a temporary job at a grocery store or something like that because they've lost their job.
DoorDash.
Yeah, exactly. Or doing those kind of things.
Right.
Which those temporary jobs are not. We can't use that for mortgage qualification, so we're not able to use that. Secondly, they don't have a permanent. Their job is furloughed without a date, and even if someone put a date on it, that could be bumped.
Right.
The COVID-19 is not. This is completely unknown to everyone. So that is a big issue. How the industry is doing that is really on a case-by-case basis. So like, for instance, a client was under contract and all of a sudden they lost their job. We can't close until they actually have their job back. Fannie and Freddie gave some details of we're going to be lenient on obtaining verification of employment from the clients. And when they did that, it sounded like, oh, great, but they added a caveat, but everyone still has to qualify based on our guidelines. They're just allowing the freedom to obtain that verification of employment in case some company's HR department may not be working as diligently. So now we can get an email from someone, but at the same time, the client does have to be working. It's not that the verification of employment is changing. Right. It's still the same verification of employment. They have to make sure they are working. In addition to the clients having to be working, we're making sure businesses that are in business for themselves, we have to prove that they are still working. Because they may be, even though they wouldn't furlough themselves, they may not be able to work right now. So these verifications, one of the biggest things that has adjusted is when we send out the closing disclosure, we're now sending out a letter that the client has to sign that says, yes, I'm still employed. Yes, my hours are the same. Yes, I understand that I have to be employed in order to obtain this loan based on what I gave the information. So it is actually loan fraud if you are a client and you're kind of hoping you can go under the radar because you were furloughed 2 days before closing. You're having to sign a form saying that you are working and your job is going to continue. So not only are we getting it from the client's employers, we're also getting it from the client themselves.
Yeah. So like a check stub, you said an email from, say, HR. Are there other forms of documentation that are acceptable to show that you are back at work?
It's case by case, really.
Okay.
But we get a verification of employment from the employer where my processing team will order this from the employer and they fill out a form. As well as some situations, I had a truck driver recently who gets paid by the mile and he was furloughed. So when he got back to work, they wanted to see his actual first paycheck stub to show that he was still getting the same amount or at least somewhat close to. Well, his first pay stub just showed a couple days work, so that wasn't good enough. So what we ended up doing, this is case by case, they're working. We got basically his timesheet that broke down exactly what he was going to get paid for the next paycheck, which wasn't coming for another week. But since we had the timesheet, we sent it to the employer verified that was his timesheet. That worked.
So it sounds like there's a lot of flexibility in what you're willing to use as documentation to verify that return to work.
Correct. If someone's a 40-hour employee person, it doesn't really mess them up at all.
Right.
If it's an average income, like a hairdresser, the truck driver, that sort of thing, then they will average, they'll cut out that COVID-19 furlough period. Like, say it's now been 4 months into the year, but 1 month, 1.5 months they weren't working, they'll take that piece out and just average what's left.
That's great.
So it makes it where it makes sense.
That's good. That's helpful. The market and your job and the real estate, just the whole housing industry, how do you anticipate it will return once the government restrictions are lifted? People can go back to work. Companies are reopening. How do you see the housing market returning or rebounding? Or
the housing market as a whole, I'm just amazed at how it's still a huge seller's market. People are still out there buying.
Right.
That it's still doing good. But I think once people are back at work and it's no longer scary, when we get a handle on this, no one knows how or when, but when we finally do, I think it's going to be immediate. They will lessen the extended guidelines that have moved up the credit scores for FHA.
Right.
That won't be needed anymore, because the risk involved of them requesting the deferment will be gone.
So do you think that the minimum credit score for FHA will see that drop?
I think it will. I think it'll drop back down. In all reality, though, the minimum FHA score in the past was 580. Our company has bumped it to 620, and some other companies have even gone higher. But you're better off when you're in the 580 range, working on your credit.
Right.
You know, getting some direction from someone like me who can tell you, hey, do this, this, and this, because your score is affected. I mean, your interest rate is affected by the lower score, so you're really better off doing that anyway.
Just working on that score.
Yeah, and getting it up anyway. So really, it's not a huge fallout of people, but it does stop people that the riskier crowd, let's say, who, or at least statistically speaking, who would be more apt to ask for that deferment.
Gotcha. Very good. So that is a lot of information. That is certainly a lot to process. So if we can just go back for a quick second and just hit the highlights.
Okay.
So about being back to work, real quick.
You have to be back to work.
Okay.
There's no way you can be furloughed because it is just because it's temporary and say it's okay, because no one knows the end. So you have to be back to work.
Okay. Documentation.
The clients have to sign a form right before they sign their closing disclosure. This is prior to the approval, prior to the closing.
Right.
They have to sign a form saying they are back at work or they are working. Nothing's changed throughout the process.
So you're requiring that documentation from the buyer as well as the employer.
Correct.
That's important.
Yes.
You can't sneak through this one.
Exactly. The employer is also within 48 hours of funding. We are requiring a verification of employment. So
48 hours.
It basically, you can't be laid off or furloughed and then 3 days later close. It's not going to happen. You have to have and they're signing something at closing saying you're still working.
Right. So then a lot of people are in a situation where they are furloughed, they're waiting, so they want to know, when I go back to work, how quickly can I qualify to buy a house?
And that's a great question. Unfortunately, it's going to be case by case. But if you work a 40-hour work week or salaried job, it's going to be pretty quickly. After you go back to work, it's going to be obvious, as long as the verification of employment can say you are working full-time back to normal. Some situations, they may need to see that first check stub. Like, for instance, I have the truck driver who doesn't get paid set hours. They wanted to see the full 2-week pay period to see what they're doing. So it's going to vary case by case, but it's kind of a make sense situation.
Right.
If it's obvious they're back at work and they were going to make the same amount they were making before, we're not averaging hours, then they're probably good right once they start back.
Some good common sense practices.
Yes, exactly.
That's always great. All right, well, that's great. Thank you again for this great information, this very timely information. So many uncertainties, so many unknowns.
Yes.
We're all kind of working through this together as realtors, as lenders, as title companies, and I think this is where the team approach becomes so important.
Absolutely.
And the communication, and that's why I always recommend people to pick a local lender, because the communication is so much easier. It's we've got email, we've got text, we've got phone call, we've got face-to-face if you're local. So thank you for providing this information and these services to our clients.
I'm glad to help, and thank you very much for having me.
Absolutely. Thank you. Thanks so much for taking your time to watch this video interview with Jeneane Stomm. If you found it helpful, please like and subscribe. Also, if you'll just go ahead and click on that bell, you'll be notified when any future videos are uploaded. Also, if you have any questions about the home buying process or about lending or pre-qualification, don't hesitate to reach out to either Janine or me, and both of our contact information will be in the comments below. Thanks a lot.